the reality is that there's really no more QT going on, and this symbolic QT of $5 billion a month, it's literally nothing, is once that flips, that's going to be a pretty big signal to the market that the game is on, liquidity is coming back in, and these risk assets are going to rise again. And the one that always leads it in the last couple of years has been Bitcoin. So just keep the first principles. Don't worry about the price activity. You know, it is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns, and we have drawdowns like this because we have the ability to do that. And you do too.
Lavish emphasizes that the recent market pullback is no surprise, particularly given the aggressive run-up in risk assets. Markets tend to revert to the mean, adjusting to the available liquidity in the financial system. This process operates with a lag, meaning that liquidity conditions today will influence asset prices in the coming months. A major focus in the financial community is the trajectory of the 10-year U.S. Treasury yield. Investors are speculating on where it will settle by year-end and how Federal Reserve policy will adjust in response. Recent data from Bloomberg's World Interest Rate Probability suggests fluctuating expectations, with markets oscillating between pricing in 2 and 3 rate cuts by the end of the year. These shifts indicate uncertainty about how much liquidity the Fed will inject into the economy and the broader implications for risk assets like Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin has had a tremendous run since the election of this new administration. It's no surprise we've had a pullback. It's no surprise we've had a pullback in risk assets. I mean, you know, we have talked about them getting ahead of themselves, and the question was liquidity going to be pumped into the markets to catch up to them, or were the markets going to contract to mean revert back to the amount of liquidity that's out there? And so we're seeing that the markets have been mean reverting back to the amount of liquidity that's out there, and that's a lag, though. We have to remember that it's a lag. So now what we're seeing is people speculating about where the 10-year Treasury is going to be at the end of the year. How much is that going to affect risk assets? What is the Fed going to do, you know, over the course of this year? And we've seen the WIRP, right, which is it's in Bloomberg. It's your charts over there. It's your estimate over here of the interest rate probability, that we've gone from the probability of having 2 cuts to 3 cuts to 2 cuts back to 3 cuts, you know, almost 2.6, 2.7 now at the end of this year. So, you know, there's a lot of speculation about how much liquidity is going to come into the market and how much the Fed is going to do. So last week, the most important thing that happened last week, and again, it's kind of symbolic in a way, that Powell and the Fed decided to move their Treasury QT down from $25 billion a month to $5 billion. That's it, $5 billion a month that they're gonna take liquidity out of the markets and the Treasuries. They're still doing their mortgage backs. Maybe that's interesting that they're still squeezing the long end of the curve here. But the reality is that there's really no more QT going on, and this symbolic QT of $5 billion a month, it's literally nothing, is once that flips, that's going to be a pretty big signal to the market that the game is on, liquidity is coming back in, and these risk assets are going to rise again. And the one that always leads it in the last couple of years has been Bitcoin, and we agree on that 100%, Mike. I don't agree that it should be long term. I disagree that it's going, you know, back to 10 or 20,000. I do believe that people are starting to understand widespread. The understanding of Bitcoin is expanding, and that there's still tremendous tailwinds for Bitcoin in particular, not Dogecoin, but Bitcoin in particular in the coming years. People do not believe that this beanie baby, this tulip, this Ponzi scheme is going to be worth anything, because it's not. You can't hold it. To quote Peter Schiff, you can't hold it like gold. My gold watch, he shows me on the stage. I have a gold watch. I can wear it. I don't care. It doesn't matter to me. It can be seized at the border. It can be taken from you. Somebody can come up and just rip it off your wrist, especially because you're, just little Peter Schiff. But the thing is, people are starting to understand this better, and it is a technology. Like my wife likes to point out, it is not a technology company. And so as people get to understand that better, then they're seeing how it is different than all the other cryptocurrencies that you're quoting. Now, I think if I understand correctly what you're saying, Mike, to be completely fair, and I don't want to put words in your mouth, but I want to understand what you're saying. And I think what you're saying is you understand Bitcoin, you understand the technology, but it has all this competition from thousands and thousands and thousands of other cryptocurrencies that people don't understand, and that's taking market share away from them. Am I right on that, or do you just believe that Bitcoin is just one of them? So just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns when we have drawdowns like this, because we have the ability to do that. And you do too. If you just leave a little bit of extra powder and you're not always all in and you've got some powder, then you can take advantage of these drawdowns. And that's the volatility advantage of Bitcoin. So, and the fact that it's rising over the long period of time, that gives you these opportunities to take advantage of price swings. And I think it's a good thing. Am I nervous? Nope. Am I optimistic? Absolutely. Super optimistic about especially some of the opportunities we're seeing for the fund. Some of the private opportunities we're seeing for the fund that, other investors just don't get access to, because we're involved in this space, and that's an advantage. And being involved in this space is a really big deal. And you got a lot of people on the outside that have no idea what's going on here. We're so early.
A major development affecting Bitcoin was the announcement of a new strategic Bitcoin reserve established through an executive order signed by former President Donald Trump. This announcement initially generated significant excitement, but the details led to market disappointment. Many investors had hoped for a large-scale government purchase similar to the Gold Reserve Act. However, the absence of an immediate buying commitment led to a market sell-off.
Look at the NASDAQ, it's down from over 20,000 down to 17.5. So, it's down over 10% here, and 12%. And so that's been a pretty good drawdown. And so but that's all it has to do with all this uncertainty. Now, if there are a lot of people here wondering, well, okay, got all that. We've got the big picture. Is that what is driving Bitcoin down? Okay, well, Bitcoin is a particular beast, right? So last week, we had the announcement of the new strategic Bitcoin reserve. And that's a big deal. And there was a really big deal. And it was an executive order signed by Trump. I actually wrote all about it in my newsletter this last weekend. But the crux of it is that the most important parts are, okay, Bitcoin they've established a strategic reserve. Number one. Number two, they mandated that no more Bitcoin is sold from the government, holdings. So they're going to hodl. That's number two. Number three, they're not going to buy any more outright. There's no plan to just go and buy like 200,000 a year or $1 million or $200 billion worth or $100 billion. There's all of the possibilities that people had run through and expected something announced about how much they're going to buy, when, how they're going to do it. Well, that was all tabled. And they said, we're not out there buying any right now. That's just not in the plan. And so because of that, the market sold off. Now, before I go any further, they did say that they would buy Bitcoin if it was budget neutral, meaning if it didn't require tax dollars to go out there and buy them. So if they could use something else in the budget, something else on the balance sheet to sell and offset that the cost of buying more Bitcoin, then they're looking at things to do there. Well, what would they do there? Why would they do that? Well, they could do things like they could sell some of the stockpile, the digital asset stockpile that they also announced at the same time. And that is the different cryptocurrencies that are seized from law enforcement, the government entities, when there's some sort of illegal or illicit activity. Things like Solana and Ethereum and XRP from illegal activities, they'll take those and they'll put that into what's called the digital asset stockpile. But they're not planning on buying any of those either. And there's no plan to buy those at all. There's no plan to buy those in a budget neutral instance. It's just there's no plan at all to buy those. So it would make sense to me that that's the first place that they would go to kind of seize those, have that stockpile, maybe sell those off and buy Bitcoin with it at some point. I don't know when or how or whatever. They could sell other things, they could sell gold, they could sell land, they could sell cheese, whatever they want. According to this, they could sell oil. I don't think they're going to do any of that. That would be budget neutral, but I don't see that. So I could see them doing other things and figuring out other ways to buy it, budget neutral, but still that disappointed the market because there was no announcement that, we're going to go buy $100 billion on an executive order, just like the Gold Act. We're just going to go and put it in a strategic reserve because it's important to have on our balance sheet. They're not doing that. They're also not going to just say, we're going to buy 200,000 Bitcoin a year, like Senator Lummis's bill, the Bitcoin Act says. Is that possible to still happen, to get the Bitcoin Act passed? Maybe. I mean, I don't know what their plan is there. But the reality is that right now it disappointed the market. Why did it disappoint the market? Because we didn't get that plan to buy a bunch more.
Lavish sees the potential for future government Bitcoin purchases under budget-neutral conditions. The government could fund Bitcoin acquisitions by selling other assets, such as seized cryptocurrencies from illicit activities. The newly established digital asset stockpile includes confiscated Ethereum, Solana, XRP, and other tokens, which could be liquidated to acquire more Bitcoin. While this approach remains speculative, it represents a plausible avenue for expanding the government's Bitcoin holdings without requiring additional taxpayer funding. Lavish remains optimistic that over time, policymakers will recognize Bitcoin's strategic importance and allocate resources accordingly. Please like and subscribe.